This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. So what we're going to do today is talk about RSI, and I want to go into a couple different aspects of RSI and the way I use it. It can be used in two different ways. One as a trend indicator, an indication of whether we have a strong enough trend to continue to make higher highs and higher lows. And also it can be used as an overbought, oversold oscillator. Now, when you combine those together, which is the way I draw it up, it can really lead to some outstanding signals. All right. Now, I'm going to show you or talk about at least how I use it in conjunction with MACD and ADX. So let's go ahead and get going with this. If you are interested in learning some of these techniques, you can start with the book. It's at rabilstockresearch.com/book. And also, if you enjoy this content, please hit the like button and also subscribe. Okay, so I've got the weekly chart of IBM on both the left and the right. They're actually the exact same chart showing the same information. I've just displayed it in two different ways because I want to start on this left side so that you truly understand what we're trying to accomplish with this RSI setup. All right, so the way Stock Charts has this set up, it actually already has the 70 and 30 overbought, oversold line, and it has this dotted line 50 in the middle, which is exactly how I like to use this indicator. Now, the red line is an RSI 20. Now, I know what comes out of the box in standard. If you opened up the program and you set it up, it's going to come out as an RSI 14. And an RSI 14 is a great indicator. It can be used. I like it mostly if I'm going to use if I'm a divergent signal, like if I'm going to play counter trend divergence signals, then I would probably just use RSI and not use these two. But I'm using this in a different way. What I want to do is start out with the RSI 20 and use this 50 line as a gauge as to how strong the trend is. All right, now if we can make higher highs and higher lows in price and have confirming signals making higher highs and higher lows in the RSI above the 50 mark, then we are in a trend. We are strong enough to trend to the upside. And you can see how this IBM chart was moving down and then it turned back up, and here is where we got back above the 50 line, and actually on a pullback to the 18 here, it held that 50 area. Now, it wasn't exact, it might have clipped it by a little bit, but it was right in the area of the 50 line, and then from that point on we have held 50, and even here during these two pullbacks we didn't even get all the way to the 50 line. It was so strong that it stayed above that, well above the 50 mark. But anything above the 50 mark is basically saying this is a trend. This is a bull trend. And we can do the same thing to the downside. If you're in a bear environment, it'll keep hitting its head on the 50 mark and failing. All right. Now, so that's one side of the equation. That is what I'd call the trend side of RSI, using that RSI 20 to tell us about the trend. Now, RSI 5 gives us an overbought, oversold oscillator. Now, there's two different versions of that as well, because when you're in a strong trend, you should not expect oversold readings. You shouldn't get really deep oversold readings. Now, this was actually the beginning of a strong trend, but it hadn't quite emerged yet. And so this was basically the first pullback. This pullback here is the first pullback in a new emerging trend. And a lot of times you will get sometimes non-believers, people that are taking advantage of a big move, saying, oh, this stock hasn't been going anywhere for years, I'm going to take a profit in it, and causes it to drop down. And you do get an oversold reading, usually more early in the trend rather than later. Or you can get it sometimes when the market is getting hit. All right, you could be in a strong trend and a stock goes down with the market and gets deep oversold reading. But the key to this is that the RSI 20 holds above the 50 level. And most of the time when you get a deep oversold reading, you're going to come down and find support at the 40. All right. If you're not holding the 40 on these deep oversold, then you got to kind of question the signal. But if you notice that there was one here early in the signal, it came very close to the 30 mark and got oversold, and RSI 20 was holding, right? So this, we're looking for this to hold the 50 level and this get oversold. So that's a deep oversold signal. Now the other version is when you get the trend going, it'll hold the 18. It'll come back to the 18. The RSI 20 might not get that close to the 50 mark, but we'll get the RSI 5 to drop down under 50. All right, so this is more of a classic signal here where RSI 20 is holding above the 50 level and the RSI 5 is getting below it. You shouldn't expect a deep oversold reading when you're in a strong trend. You're just going to pull back to the 18 in these cases. And when that happens, we only need the RSI 5 to come down below. All right, now the way I display it to save room, right, is to overlay these. And you can do that very easily. Just take this and drag it and it'll go right on top. All right, so now I've got the RSI 5 and the RSI 20 together here, and I can easily see when this is pulling back to the 40 here that this is holding above while this is getting a deep oversold reading. And not only that, we had this deep oversold rally up, had a double bottom test, right? And this was making a significantly higher low. So that was another form of divergence that was forming while the RSI 20 was holding above 50. So very good oversold signal to be on the lookout for. All right, so then we get these pullbacks here. Now, the main point I want to make sure you understand is that I don't typically use this signal, these RSI signals that I just displayed, as a standalone. All right, I'm not typically doing that. What I'm doing is I'm actually combing through my stocks that I put out on Wednesday. That's my watch list essentially that I send out to subscribers. And I'm looking to see if there's anything that has really dynamic looking big base formations that has strong ADX conditions and a good MACD patterns or setups holding near the zero line or whatever that are giving me RSI signals. So if I get a stock that is emerging out of a base and then gives an RSI signal, kind of like on that first pullback, where the ADX is strong and emerging out of a base or has been a low ADX condition and breaks out, then I get really nice confirming evidence. Now, I'm not telling you not to use the RSI as a standalone signal. All right, you can do that, but you will get a lot of signals, and I think by and large you'll make money over time. But using or having another filter to screen that list and narrow it down will give you less signals. You won't be getting signals all the time, especially if you go down to smaller time frames. If I go down to a daily chart, I can get a lot of signals using this RSI signal, this RSI approach. So what I want to do is actually look for other things that lead me to a stock that have real potential or are emerging out of a big base, and then start to look for this signal as an additional qualifier that can help supplement my signals. I have 4 different entry strategies or trigger signals that I use that are in my course that can really help using the 18 and the 40 and the MACD and the ADX. All right, now there are times where when we get into deep pullbacks in the market and stuff like that, where those signals will lag or you'll miss a signal because you'll get kind of like a modified V-bottom develop. And when that takes place, a lot of times what you're getting are these deep oversold readings that are taking place where the RSI 20 is holding in the 50 level and the RSI 5 is getting under 30. And if we can get those in stocks that have strong trends, especially holding up relative to the market during deep pullbacks in the market, we can really take advantage of that. All right, so I wanted to make sure I covered this and keep talking about it. I get so many emails about RSI from so many different subscribers, as well as people who have taken the courses who have said that they've done exceptionally well using the RSI approach. And what I would tell you is I'm just going through my history, my experiences, and I can use I could just go and find RSI signals. I used to do that when I was day trading, but you know what I find is that if you can supplement it and use it in conjunction with, especially the ADX signals that can develop, where we know we haven't done anything for a while because we have a low ADX condition and it's starting to emerge, or you have a long sideways line in price where it hasn't broken out in a while. Sometimes you can use the RSI signal to anticipate a breakout, and that can be a very powerful tool as well. So be on the lookout for this. Get to understand this. Use it as a supplementary entry signal. It can come in really handy, but just make sure you understand the dynamics of it, and hopefully you get the difference between the 20 and the RSI 5 and how they're used together, but in different ways. All right. Let me know if you have any questions. Thanks.